Welcome to Daily Crypto, episode 36. We're diving deep into the crypto landscape today. Things are definitely shifting fast. It feels like a period with a lot of price action, some big industry moves, and, well, a mix of challenges and real opportunities shaping up. So let's maybe unpack the market first. What are we seeing right now? Okay, so Bitcoin's hovering around what, $106,960, and Ethereum's at $2,447, both down a little bit. What do these little dips tell us? Especially think about the altcoins.
That's a really good starting point because while Bitcoin and ETH are just seeing slight pullbacks, the more significant story is the downward trend for a lot of altcoins. We're talking Solana, XRP, Shiba Inu, Pepe, Bonk, Dog with Hat. They've all seen some pretty noticeable drops. It suggests, a general move towards what investors see as safer bets. Often that means Bitcoin, especially when uncertainty creeps in or Bitcoin dominance rises.
Right, a flight to quality, so to speak. But there's always one bucking the trend, isn't there? Podcat is actually up, sitting at 30.269139. Is that just like a meme coin doing its own thing, or is there something more to it?
Bobcat's performance, yeah, it is interesting. It really highlights how unpredictable meme coins can be. But sometimes strong community hype or, very specific speculation can just push a coin against the general market flow. It's a good reminder that even in a downtrend, individual projects can have their own separate momentum, different drivers entirely.
Okay, makes sense. Now, despite the volatility, we're still seeing progress, especially around institutions getting involved. But maybe before that, let's touch on a persistent challenge: security.
Exactly. Security is, well, it's still a massive concern. Get this, $2.1 billion in crypto was lost to hacks and exploits just in the first half of 2025. That's a staggering amount. And it's not just about the money lost, right? It really underscores the need for better security, better infrastructure, and users needing to be vigilant. It's all about building trust.
$2.1 billion. Wow, that is a huge figure. But even with that backdrop, institutions seem undeterred. Like Backchat, that's a major platform for institutions, right? They're planning to raise $1 billion and intending to put that into Bitcoin. How significant is that kind of commitment?
Oh, it's incredibly significant. A move like Bacchus signals really deep, sustained confidence in Bitcoin as a long-term hold, even with the market swings. And, related to that, look at Grayscale. They just updated their top 20 list for Q3. They've added Avarax and Morpho. It shows that the smart money isn't just focused on Bitcoin and Ethereum anymore. They're looking at high-growth layer ones, emerging DeFi, diversifying.
And it's not just crypto firms jumping in. We're seeing traditional companies, too. Upexi, listed on NASDAQ, is tokenizing shares on Solana, and they've added 56,000 SOL to their treasury. First, what does tokenizing shares actually mean for a company like that?
So tokenizing shares, basically it means converting traditional company stock into digital tokens on a blockchain. The idea is it makes transactions easier, faster, maybe more transparent. And for Upexi, holding that much SOL, that's strategic. It shows they believe in the Solana network, sure, but it also positions them to maybe use Solana for Web3 stuff down the line, integrating it right into their business.
That mainstream integration is definitely something to watch. Okay, back to the market mood for a second. We mentioned altcoins dipping, particularly meme coins, as Bitcoin got stronger. And then there was the specific event, a Trump-linked sell-off. $35.7 million in tokens moving. What does that tell us?
Precisely. That kind of event really shows how sensitive the crypto market still is to, well, public perception and external stories. The Trump-linked part isn't really about the politics itself. It's more about how sentiment, even if it's politically charged, can directly cause big market moves. It just proves that, emotion and narrative still play a huge part, not just the underlying tech or fundamentals.
Got it. And alongside all this market action, the regulators are getting more active, too.
Indeed. We're definitely seeing more IRS warning letters going out to crypto investors. And word is the U.S. Senate is really trying to finalize crypto rules maybe by this fall. So yes, increasing scrutiny, a clear push towards more comprehensive regulation that can cause jitters short-term but longer-term. Clearer rules might actually help institutions feel more comfortable.
Right, could pave the way for more adoption. And amidst all these big picture things, there's this trend people are talking about: cloud mining. Seeing it mentioned as a popular strategy this year for passive income.
Yeah, cloud mining's become pretty popular. Essentially, it lets you rent computing power from big data centers. So you can mine crypto without buying and running all the expensive hardware yourself.
Yeah.
It lowers the barrier to entry,
Yeah.
makes it more accessible for everyday folks to get involved in mining and potentially earn some passive income.
Okay, so quite a mix today then. We've covered a volatile market, those serious security numbers, but also big institutional plays and even traditional companies getting involved. Plus, the meme coin wildness, the regulators closing in, and new strategies like cloud mining popping up. It's complex, definitely dynamic, but pretty fascinating too. Lots of challenges, but lots of innovation.
Exactly. And it leaves you, the listener, with a key question, I think. Given this blend, the market swings, the institutions coming in, the regulators watching closely, you have to ask yourself, how will all these different forces actually shape crypto's future? Will it become more integrated into our everyday financial lives? Or will it remain more niche? Something to think about.